Fasad has asked for TD and ENB.
Yes, TD and ENB is about. We'll move to the TD.
Just a disclaimer again from my side. I had entered TD earlier. I've liquidated 50% of my stock holding already.
Wow. Now we all know your portfolio. Enterprise for Baba, current levels. Current levels are like good. So
yes,
when
levels for Baba are good, yes.
yeah, so in the market, but in not in the pre-market. So pre-market is normally hyped. When the market opens, sometimes you see a small fall, and those who have bought in the pre-market, they just sell it. And then after 15 minutes, it start taking up. This is a normal trend, but not always. So watch the market in the first like 15-20 minutes or so, half an hour. So after that, you can plan your trade, but the current levels of 272 are good. Okay, TD has given a breakout. Breakout is there, but on the other side, the RSI is like it overbought. Yeah,
overbought.
Overbought, yeah. So it is in the overbought
That's the reason why
area.
I sold off at 69.
So you sold out at 69.
Sorry, at 68. Sorry, I sold off at 68.
68 is a good one.
Yeah, I sold off at 68. That was 50%. My next target I've kept it for 71.
So because of this gap, 72, yeah. This one. Yeah,
I'm not going to wait for the gap to fill. I will sell it in between the gap only.
In between the gap, but okay, this gap has to be filled in sooner or later. But from here, it can take a small breath.
That is why 50% has been taken profit of.
Yeah, small correction for this RSI to cool down. Maybe at this level, it can come at this level. Well, it has a little bit like support at this. It might come here again and then start picking up. So the next levels can be here. So it will move somewhere at these levels, or maybe sometime even lower than this, like at this level, before it goes straight up to 70s level. So at this level, the fresh buying should be avoided. Those who already have this, they can, like as Vivek did, 50% already profit realized, and the next waiting for another jump. But he is still, accepting a small correction here, and then it will go up. So for the fresh buyers, avoid. This is not the time to do a fresh buying unless the RSI did the correction and it come back again either at this level of 55 or again at the level of like 30s or 40s. So that can be accumulating area, and the price at that level will be 63 for, like, I would say 20% here, 20 to 30%. And next accumulating range will be around 61. Yeah, 61 and 50. This would be the range where you will accumulate most of your quantity, and a little bit quantity here, and then the remaining quantity between 50, this level of 58.
I would not buy at 63. I would not buy at 63 because of the gap up at 60.
Gap up at 60. Where is this?
That is in November 1st week. This gap.
This gap
because of this gap, I will not buy at 63. I will wait for the gap to get filled in.
Gap filled in and come below at a level of 61.
And then pick it up at 60 to take it back to 70. So I'll be a buyer at 60 at 61.8% retracement for a target of 68.
68.
Or 59 for a target of 68.
Good. So yeah, you're right. The gap is important and can be filled in easily.
Because of the gap, only because of the gap I'm not buying at 63. Had the gap,
that's why I said
I would have bought at 63.
Yeah, you're right. That's why I said only 20%, or maybe like you can even avoid that 20% as well, because there's a gap. And this one other thing which we just discussed is the angle of elevation. All the
angle of elevation is very acute. Very acute.
Yep. So close to like 80 degree or even more than 85. So
yeah.
So this one can, or if I drag it down further,
going right down from 58.
Yeah, these levels.
Rise.
So right from these levels. So the way it has gone up, it can come down at the same levels. I'm just trying to see some other pattern here. The wave pattern, Elliott wave, if we can see that.
A bull
Just give me a
wave.
second. If it is forming that level, wave.
Looking at a bull wave? No.
I'm looking at the Elliott wave pattern.
Elliott wave, yeah.
Yeah, if it is like wave 1, wave 2, wave 3, yes, it can be. If we consider this as a wave 1, let me draw
Yes.
this. Okay.
I've understood. All right. The first,
Yeah, this one is a wave
this
1.
and this becomes wave 2 down.
This one becomes wave 2. I will remove this one here.
That's all right. The wave 3 is always acute.
Yeah, it will. Wave 3
Wave
is
3
the
is
highest
always
wave
acute.
for the remaining weeks. I'll make it like a little bit cleaner for the other guys to understand. Then I will explain to you what is this pattern. Let me draw this and then I will explain. So this is now wave 3, and the length of wave 3 is normally greater than the other one, maybe filling the gap. And till here. Okay. And the fourth one
Will be a correction down.
Yeah, it won't enter the wave 2, so it can be here till here, max. Yeah, but it has support as well, so it can fall below these levels. Okay, now the wave 5. Somewhere here. What are the previous levels?
Yeah, you're right. You're right. Your previous level is touched.
Yep. So this one is wave pattern.
Yes.
Okay, guys, let me tell you a brief overview of how it works. So every time when there's a price move, this move is within a pattern, and we have like Elliott wave pattern theory, which says that price always moves in a wave pattern, and there are like 5 waves. This wave 1, wave 2, wave 3, wave 4, wave 5. So the interesting thing is whether you look on a daily chart basis, you will see a pattern of this wave, the 5-wave pattern, or you look in on a weekly basis or monthly basis or even on hourly basis, the candles tend to form this wave pattern. And there are some rules attached to this wave pattern due to which you make this you make this wave theory, or you analyze the price and see where the price will go, because at this point in time we don't have the price till here and here, but still we have formed these waves based on the rules. What the rule says, rule number 1, okay, there is, after first wave has been formed and the second wave, you start looking at from the second wave. In the second wave, the rule is the second wave cannot go below the first wave price. So the price shall not be below this level. If the price would have been fallen below this level, then I will not make a wave pattern here. So second criteria was filled in. Now the third criteria is the third wave. The third wave is like the longest of all the waves, okay, or the other thing is it can't be shorter of any of the waves. Any of the waves at this point we have like these 2 waves only, so it can't be shorter of these 2 waves. So I have made a wave till here. It tends to like almost equal to the wave 1. Why I stopped it here? Because of this gap filling, and then we have here a resistance coming in, so I stopped it here. And then the fourth wave is formed, and the rule for the fourth wave is it cannot enter the price levels of wave 2, so I stopped here again. And then the fifth wave, it touches these levels of the third wave. And so the idea is there are like 2 corrective waves here, wave 2 and wave 4, and the 2 waves where the stock goes up, 3 waves, wave 1, wave 3 and wave 5. So that's how this wave pattern works. We call it the Elliott wave pattern theory, made up of 5 waves. And now let's see how it's gonna work on TD. So TD is already in the wave 3 region. So wave 3 region can take it up higher to the levels of 70, up to the level of 77. And for this to happen, it's not necessary that it will continue its journey like straight forward. It can take some corrections. RSI and other indicators will cool down, and after that you will see the price is still going up till 77. But once this level is reached, then you will see a corrective wave falling below. So what the analysts say is like you make the huge gains within wave 3, and you need to go out of the stock when it starts falling down, because this is a corrective wave and you will lose almost everything that you have earned in wave 3. So get out of here, so and then you will pick it up here again for the wave 5 pullback. So best entry point within this wave pattern is the start of wave 3, and the exit is the end of wave 3. So you have to catch this pattern. You can start analyzing this pattern in different stocks and see if you are able to apply, but don't apply it forcefully. If it is there, you should go for that, but don't do it just for the sake of applying it. If it is not forming the wave pattern theory, you're not able to catch it, just leave it. Otherwise, you will end up in wrong trade. Okay, so the TD is, I think, yeah, TD looks good here, as we previously mentioned, filling up in the gap, and then also this is supported by this wave pattern theory. So I think our analysis holds good on this TD stock. Yes, Vivek, you want to mention something here?
No, you covered everything.
Okay, that's good.
Right.
And
I'll give you my logic of earning at 71. Number one is a gap. I don't want to wait for the gap to get filled in completely. So I'm expecting to take some profits out. On the first dip at about 60, 66, 67, I may again enter in to take the next wave, to take the next wave to 75.
Yep.
Then I will not exit at 77. I will exit at 75, 74.
Yeah, once this gap is filled in.
Yeah, once then I will exit for that 74 or 75, and then wait for it to crash completely.
Yep.
Because the Elliott wave is reconfirming what we were thinking.
Exactly. So these can be levels are looked at, but again, guys, if we are analyzing it here again, like at 77 level, at the level of 77, it will not be a straight line for sure.
It will not be a straight line.
Yeah,
it
because the RSI is on the top, so it has to cool down.
Yes.
It will make some zigzag cooling off, little bit correction before it resumes its journey again. So that's how we are looking at TD stock. And okay, now we can move to the next one, guys. If you have any question related to this, just message me in the chat box, and then
I think
we can answer that.